Okay, so SoFi technology and Tesla, which company is better to hold for long term? For me, I'll pick SoFi technology. I believe SoFi has the potential to be 5 times in 5 years. And Tesla, I think it's also possible, but not ready if we think about that how big Tesla already is. The market cap is kind of like 760 billion. If they can be 5 times, that will be almost 4 trillion. That is unbelievable. Now let us take a look at their financial results. If we look at the SoFi's revenue, the Q2 they just released grows at 37%, and also SoFi grow their members very well. Year on over year, they grow 44%, and it's a beautiful chart. Also, the products, Galileo, it's a little weak, but the financial service products is also very beautiful. And SoFi also has a very good productivity loop. And for Tesla, we see that the last quarter Tesla sales grew a lot. Year over year is 46%, and the Q2 profit is 2.7 billion. If we look at the trailing 12 months, it's about 12 billion, but consider the market cap 770 billion. The P ratio is 79. That is a lot. But with this kind of pricey, we cannot say Tesla is too expensive or just cannot be invested. It's still possible that you can make a lot of money, but there is some risk because it's just so expensive. And even though Tesla is a great company and Elon Musk is a great CEO and just so smart and he deliver, if we think about it, Elon is successful in PayPal, and he also successful in SpaceX, and he bought a Twitter, and even though he fired 75% of Twitter's employees, the Twitter just worked. Now maybe we should call it X.com. Works, I think it's as good as before, or maybe even better, because you don't the Twitter and also the believe they made some changes, and whether it's good or not, we can see with the 1/4 of the old Twitter's employees, Elon can still deliver. So I think Elon is a very good CEO. To compare Tesla and SoFi, there is kind of that one important thing we need to think about is the mode. In which company has a better mode? A mode is kind of an economic mode, is a distinct advantage a company has over its competitor that allows it to protect its market share and profitability. The mode is kind of that taught a lot by Warren Buffett, and I believe Warren Buffett is one of the best investor in history. In how to measure whether a company has a good mode or not. Usually there are 5 types of modes: that low cost production, and we know that Coca-Cola, they can produce their product with a very low cost, and other companies it's so hard to compete with a Coca-Cola. And Tesla, Yeah, they can produce Tesla EV in a much lower cost than other company like Ford, like GM. So I'll give Tesla low cost kind of like 8 point if it's from 0 to 10, and 10 is the largest, because Tesla do have some advantage in the low cost comparing with other company. And SoFi also is a low cost company. They can give the customers that APY with a 4.5%. That's much better than the traditional bank, because SoFi is a digital bank and there's no branches. And under the CEO Anthony Lotto, SoFi is ranked in very good operation efficiency. So I'll give SoFi that 7 points. In the high switching cost, I don't think Tesla and SoFi are that excellent in high switching cost. Yeah, for Tesla, I think they have very good brand. It's a kind of a household brand, and people drive Tesla. I think they feel comfortable based on my understanding. But if somehow other company they can kind of like produce better cars, I believe, and with a kind of like lower cost, I believe it's not hard for people just switch to other EV. But for SoFi, it's a little harder, because SoFi has a lot of product that you have: saving and checking account, invest account, SoFi Relay. Also, you may have loans with a SoFi, and they all under one app. So if you want to switch your product to other company, yeah, you need to think about that. It will make you feel uncomfortable to management your money, your finance. So with all these product organized in one app, and you can see your budget, your spending, and your credit, your investment, it will be harder for you to switch. So for the switching cost, I think SoFi is better than Tesla. Network effect, uh, I don't think that is an advantage to them, even though Tesla kind of like sell a lot of cars, but that won't keep the customer to switch away if they find better product. And so far, that's the same, even though you have that 6 million members, even 20 million members. But if one member find that if he switch to another company, he can kind of like get more better service, or can save more money, or some other stuff, they can just switch. So network effect is not kind of like an advantage to both company. Some other company, that the Facebook, Twitter, yeah, they do have great network effect. If most of your friends, the people you like, they use Twitter, they use Facebook, it will be hard for you to switch away. Intangible assets. So Tesla is already a household name, and if people think about the EV, most of the time they'll think about Tesla. So Tesla do have a very good brand. They have very strong intangible assets. And SoFi is growing, and they also name in the SoFi Stadium. So SoFi's brand is growing, but for now, I think it's not as good as Tesla. I'll give SoFi's intangible asset that's 6 points. Other company, they have great intangible asset would be that Google, Microsoft, and efficient scale. And Tesla do have several super factory in which can reduce their production cost. And SoFi, yeah, because they are digital bank, and Anthony Noto is also a very good CEO. Yeah, he run the company in a high efficient way. Also, he deliver So I think SoFi do have some efficient scale, but not very strong. In total, we can see that Tesla has more points than SoFi, which means, in my opinion, Tesla has better mode than SoFi. In both companies, I believe they do have some mode, even though not as strong as that Google and Microsoft. And now we can take a look at that the valuation of SoFi. And I made some assumption that after 5 years, SoFi can have 20 million people and 20 million members, and each member could have that 8,000 deposit. And also they are going to have some corporate and government clients and get some deposit from this. And in total, I assume that I could have more than 200 billion deposit after 5 years, because they grow their members, their products very well. And with 1.2% or the profit margin from the deposit, I can make about 2.5 billion after 5 years. With a 15 times PE, the valuation would be about 37 billion. And SoFi Invest, I assume that 40% of the members have SoFi Invest account. With that, SoFi in 5 years may have that 8 million Invest account. And I use Interactive Brokers market cap as a reference. IB now has a market cap about 36 billion with a 2.4 million Invest account. And I give say that SoFi after 5 years maybe has that 60% of IB's market cap. That would be about 22 billion. And the other way, if I assume that if SoFi can grow the financial service at that 14%, 15% quarter by quarter's revenue, after 5 years, they could have that 1.1 billion revenue per quarter. And financial service is a kind of that high incremental margin business. So if I give that the 5 times price to sales ratio, and with each quarter, they are going to make that about 1.1 billion. 1 year will be 4.4 billion. So the valuation could be about 22 billion. And for technology, I excited about 5 billion. And it's hard to know that how they can grow their technology section, that the Galileo and also some other service from technology side. But I think 5 billion is, very conservative. So with these 3 sectors, the total market cap of SoFi can grow to about 64 billion. And I assume that the share outstanding will be diluted to about 1.2 billion after 5 years. With that, the stock price per unit would be about $53, which would be still higher than the 5 times of current SoFi's market price. I think SoFi now is that $8.7 is less than $9. So if we times 5, that would be $45. So I believe SoFi is a good invest. And with the Tesla, can Tesla grow 5 times of its current price? The market cap is 770 billion, and I don't think they can be valued at almost 4 trillion after 5 years based on how many Tesla EV they sell. But it's also possible because Tesla, a lot of people, I think they invest Tesla because they see the potential for their FSD technology. And FSD is kind of like the automaker's beta advanced driving assistance system that can automate driving tasks on highways and urban streets. yeah, if Tesla can dominate the driverless technology, yeah, they do have very high potential that they can apply that technology into the taxi driving area. They can just kind of that deliver that 10,000 Tesla into New York City with their driverless technology to compete with the Uber, and also they can apply that to maybe the Tesla's truck, and then they can just compete with the other truck company and so on, or they can just sell the FSD's license each year. I don't know how much you can charge that 10K, 20K, 30K, and this is a very high margin business. So if they can be successful in FSD, it's possible that Tesla can double, triple, but there is a lot of uncertainty because there are a lot of competitors that the Google's way more. So for me, I'm not kind of the IT guy. I'm kind of like a financial guy. I work in the bank. I'm just not confident that Tesla can be very, very successful. I think it's possible maybe that 20%, 30% Tesla can be the best in the self-driving technology area, but I don't think 90%. I want to assign that high probability to Tesla. So in total, I think SoFi can be a better investment if you can just hold SoFi for a long term. Don't worry about the short-term stock price. And if we look at what happened before that to the Amazon in the 2000, Amazon's stock price I think went down from that $90 to $6, something like that, very, very cheap. And the Bezos sent a letter to the shareholder, and I think he had a very good opinion. He showed the shareholders kind of like the financial result of Amazon. We can see that it's amazing. Kind of like the sales grew to 2.76 billion from 1.64 billion. That is kind of like more than 50% growth. And also the average spend per customer kind of like up almost 20%. That is huge. And the international sales grew to 381 million. It's double from 1999 to 2000, but the stock price kind of like just crashed. But Amazon in general has a very good kind of like balance sheet, very good at sales and gross margin. So Bezos said that if the company is better positioned today than it was a year ago, why is the stock price so much lower than it was a year ago? As Benjamin Graham said, in the short term, the stock market is a voting machine. In the long term, it's a waving machine. I read this quote because I think that it describes the stock market and the relationship to the company very well. And I think that's similar to current SoFi situation. SoFi kind of that double bit, triple bit the market's expectation for 3 quarters, 4 quarters, but the stock price just keep going down and going down. But I believe in the long term, the financial result will be shown in the price behavior. So be patient, and I believe we will get good reward from the patience. Okay, and I do own a lot of SoFi stock, and also this video is just for entertainment purpose. I'm not a financial advisor, so please do your own due diligence for investment. Thank you.